Devin, thank you so much for taking out time for us. Always a pleasure talking to you. Mayuresh Joshi from Angel Broking is now with us. Markets continue to be at the day's high, 7,950 plus is where the markets is looking in very, very strong. 110 points higher, it's at the day's high. Mayuresh, good afternoon. Thank you so much for taking out time for us. First, a quick view on the market, 7,950. We are decently valued, or you think that there is still upstream left in the market?
Afternoon, Pankaj. I think, as we were discussing earlier, I think apart from the surprise rate cut yesterday by RBI of 50 pips, I think that is going sentimental support to the market. So yes, I think in terms of how demand will pan out, specifically in terms of festive seasons coming through, you might see an uptick happening on that front. However, I think we still stick to our argument that for a structural re-rating for the markets, corporate earnings need to revive in a substantial manner, which we do not see happening at least over the next 2 quarters, to say the least. And if there is any delay in terms of the capex program getting delayed for some reason or the other, reforms not coming through, you might actually see postponement earnings recovery happening in the first half of FY17. So our take is very much on the lines that we were thinking earlier. The markets expected, in our opinion, to stay in a range of 7,500, 7,600 to 8,100, 8,200 on the higher end of the band.
Let's go to stocks straight away, as you know, markets have been rallying. They've at the high. Which are the names among the large cap space that you like? Let's first start with say a Tata Motors, beaten out of shape, right now recovering. You think there is value over there?
Oh, absolutely, I think so. If you look at the core dynamics of the company, the substantial fall in the price of the stock has largely factored in 2 counts. I think the kind of degrowth in volumes that you're basically expecting out of China. And again, I think the markets are trying to factor in even ex-China. I think your GLR margin on a consolidated basis might still inch down. So I think even if you work with workings of less than 14% at the lower end of the band, you assume that the Chinese volumes fall to single digits in terms of 4-5% in terms of volume growth happening. And if you look at ex-China, I think if you're looking at some amount of discounting coming through on the North American markets for Tata Motors, you're still talking about in terms of price and valuations of the company being reasonably valued. So in that sense itself, I think the volumes will definitely outperform over the next 3 to 4 quarters ex-China. And if China recovers sooner than later in terms of how the new launches might go through, because their trading modular platform is going to be extremely lucrative. Their Cherry JV operations in China are going to yield result in terms of cost savings. So that is going to have a big impact in terms of how Chinese volumes, once they recover, will pan out. Even on the standalone operations, they've been doing reasonably okay with PV launches. The MHCV segment seeing decent volume growth to the tune of 18 to 20% is what we believe over the next 4 to 5 quarters. So valuations looking attractive, even if you assume, as we are assuming, lower end in terms of JLR margins on a consolidated basis, we're still feeling that the price and valuations that it is currently deriving is extremely lucrative and attractive. So yes, I think we remain very positive on Tata Motors. But again, I think over the next 2 quarters, it might underperform in terms of numbers coming through. But over the next 15 to 18 months, I think the stock will outperform.
What is your view as far as IDFC is concerned? Today is the last trading session before it gets X into the bank. So what would be your view on IDFC? 141 is where it is.
So clearly, Pankaj, I think it is a long drawn-out story, and if you've been reading to what the management has to say, I think it's a common thesis. I think any bank which starts, any new bank which comes through, I think the return ratios definitely get impacted. It's basically an infrastructure lending company. To that extent, I think the SLR norms get a little bit leaner for IDFC. They get that much amount of leeway. However, I think in terms of deposit accretion coming through, in terms of building up of their books, the liability franchise, it's still going to take time. So I think the management is very clear that the NIMs will get compressed at least over the next 4 to 8 quarters. Having said that, I think the accretion remains extremely important. Their infrastructure portion is extremely strong. Their corporate side is extremely strong as well, considering the kind of lending that they've already done. And they've already taken a very conscious stance in terms of their core lending book, because the kind of lending activities that they did to infrastructure, telecom, energy, I think that has taken a little bit of softness over the past few quarters. Having said that, I think NIM compression return ratios will remain subdued at least for the next 4 to 8 quarters. So somebody really has to have a long-term view, because even if you look at how the newer banks, when they came in, something like a Yes Bank, I think it did take time for the bank to evolve. So IDFC, in my opinion, will deliver over the next 3 to 5 years. But has somebody the patience to probably hold on from these levels for the next 3 to 5 years? I think one really needs to be constructive and take a call accordingly.
Mayuresh, stay on with us. We're taking a quick break. Coming back into about 12 minutes remaining for closing. Markets extremely strong, about the 7,950. About 9 minutes remaining for closing, and by no means this is not a strong close. In the last 20 minutes, we've seen a lot of buying coming in. I think the FII number should be a positive one today. It looks as if ETF flows have been on the buy side rather than sell side, or maybe the DII number is so big, or some HNI number is so big that they have been able to absorb this amount of selling. We were talking to Mayuresh Joshi. He's still with us. We spoke to him about IDFC as well as Tata Motors. Mayuresh, Infosys would be declaring numbers quite soon. Q1 was fantastic. You think Q2 also they would deliver?
It should happen again, Pankaj. And again, I think over the next 4 to 6 quarters, the numbers would be quite consistent. If you look at Mr. Sikka's statement, he's been very, very profound in stating that growth is going to take precedence for Infosys, and that's been clearly reflecting in how client mining activities have started picking up. The client wins have been quite substantial over the past 2 quarters. And again, at our own take, I think the EBIT margin should be anywhere between 26 to 28%. We're also talking about headroom for utilization levels to actually go up 300 bips from the current levels, sitting on huge amounts of cash, $5 billion to be precise. And I think the target that he's coming out with, $20 billion in terms of top line by 2020. I think you're seeing general enthusiasm happening within Infosys. The client wins are testimony to that fact. Again, valuations not too expensive at 17 times FY17 numbers. So I think we remain extremely optimistic on that stock with a 4 to 6 quarter perspective.
What would be your view on Idea Cellular? It's up 7% right now. Are you positive on that name, or tired of trying to find a positive news flow and positive direction as far as results are concerned?
So again, clearly, Pankaj, wait and watch. So I think you've seen a segmental improvement happening in terms of how ARPUs have panned out. And yes, I think the inherent fact remains that data revenues still have a big way to go in the overall scheme of things as far as revenue contribution is concerned, which is again a higher margin business. But again, I think looking at the leverage, the kind of spectrum payouts that they've done, the return ratios are going to take a hit, at least from an FY17 perspective. So clearly, I think with Reliance Jio coming through, we've already been hearing news on what Jio can probably do. I think that is going to have or entail a huge amount of pricing pressure once Reliance Jio comes out with its data plans. So one really needs to wait and watch. I think the cash flows is a very important component that I see for a lot of these companies. And again, I think the kind of capex that these guys need to do in terms of even their core hardware and telecom equipment, I think that also is one part to be monitored. So I think the capex plans that Idea has got of 5,500, 6,000 crores will also have a trail in terms of how cash flows will pan out. So I think FCFs is something that I keenly watch out for. I do not see that improving for Idea, and the consistency I think that one really expects would not come through at least for the next 4 quarters. So wait and watch. I think let's see how numbers come out. Again, I think in the next 3 months, Reliance Jio, hopefully if it comes out with its plans and the aggressive stance if it keeps, I think that will keep an additional pressure on the existing incumbents, including Idea and Bharti.
Right. How would you look at RCom? We had the AGM today. If you've seen the comments from AGM, Mr. Anil Ambani said that they are in talks with Reliance Jio at advanced stages for spectrum sharing. If that deal goes through, you think it will be a game changer, or again wait and watch as to how it pans out? What is the tenancy ratio? How do it translates into numbers?
So you said it. I think it really needs to come down in numbers on the financial statements. So unless I see the numbers come through, very difficult to make a constructive call on how the stock might perform. From a trading perspective or a price movement perspective, it is quite evident that it might move off from the current levels. So a 10-15% move is not ruled out, purely based on the fact that the markets will see that if any deal does emanate on the existing deals or conditions that you're probably looking at, the debt reduction might be quite substantial for RCom. You're again having buzz on the street in terms of what other implications that the stock might have. But again, fundamentally very, very difficult at this point of time. So wait and watch at least till numbers start coming through, and numbers on a sustained basis.
What do you do with a name like Tata Steel? It's up 6% right now. Is it a avoid, or again, just as you said that, for trading gains, one can, maybe try to punt it at a lower level, but otherwise, there is not much interest into names like Tata Steel, Hindalco, maybe even some of the other ones from the metal pack.
So similar to RCom, I think the trading gains can exist in all these stocks. But again, fundamentally, I think when you're looking at how the demand environment is coming up, I think you're talking of realizations actually being low at the end of the lower commodity cycle. B, I think the demand is still not there. C, I think specifically in the case of Tata Steel, you're talking about 1.5 MTP of iron ore inventory, which is high cost inventory, actually coming onto its books. So even that is going to take a dent in terms of how the domestic realizations or EBITDA margins will pan out for Tata Steel. On the European front, you're going to see a double whammy happening. Realizations coming down. I think the volume uptake, in my opinion, considering the kind of competition that we're seeing there, is not expected to be great. So I think even though the fall in raw material prices has been substantial, it might not uptake the fall in realization and volumes that you're probably talking about. So on a consolidated basis, I think you're going to see a hit happening in terms of volumes probably stagnating, realizations going down. The debt on its book obviously is going to also take a hit with the rupee depreciating a tad bit from last quarter's closing that we've probably seen. So again, I think the next 2-3 quarters are extremely challenging for a lot of these metal players, both ferrous and non-ferrous. And I think these commodity-driven plays will take some time to recover in terms of their earnings cycle. So clearly, I think the trading momentum might consist or exist in these stocks. But again, fundamentally, I think 2 to 3 quarters are expected to be very, very lean for a lot of these companies. So I think, again, wait and watch for all these players on the metal side.
What would be your view on a name like Lupin? Now, we've extensively spoken about Sun Pharma earlier. There have been some issues after that. You think money would start to flow from Sun Pharma to Lupin? Because in large cap names, there are very few names that you can own. Maybe a Dr. Reddy, a Lupin, and a Sun Pharma. Apart from that, most of them come into the mid cap category.
Again, clearly, I think with the kind of price hike that Lupin has taken, yes, I think in terms of EPS upgrades, it does act as a big positive as far as Lupin is concerned. It also increases the margin expansion potential for Lupin over the next 2 years, if one really takes that view. So I think I'm not ruling out a 4-5% additional up move from Lupin from the current levels. But again, I think fairly priced if it moves 4-5% from the current levels. I think if you look at the long-term valuations, yes, I think it'll be close to where it was deriving earnings comfort and the earnings growth that one really talks about for Lupin. Again, I think the disappointment for Lupin, Pankaj, was that no approvals probably came through. And though it has got a strong pipeline like the other drug makers, we still believe that Dr. Reddy still has some steam left. The Nexium launch that it will do, it will add around $50 million for the remainder of this year. I think high margin product. And again, I think the pipeline that Dr. Reddy's has got is much more extensive. So you're talking about 73 approvals to come through, which basically entail 47 para 4, 16 FTFs, which can be big blockbusters once they come through. So again, I think Dr. Reddy's is something that we'll keep our eyes on, apart from Sun Pharma, among the large cap space.
Right, Mayuresh, thank you so much for joining us here this afternoon. Always a pleasure talking to you. Just about a minute remaining for market to close. A very, very strong closing today. Like yesterday, we did not see the rally fading off. That is always something which the markets would take in positively. Tata Motors